Good morning, everybody. Hope you guys are doing well. Happy Saturday. First of all, let's just jump in and see if, see if I can share this actual chart I put together before we jump in. And it does show, thank goodness. But here, if you look at this chart very carefully, you will see clearly there is a spine of 30,000 all the way through Bitcoin, and Bitcoin goes above it, gets sold off, comes down, stays tight around 28.7, goes back up to about 30, and typically weekends can be lively. So we'll watch this space carefully, but let's talk about some stuff as we jump through and make sure everything's good. Well, I've got sound, which is something. So here we go. Math, money, and freedom. And of course, this is edutainment, not financial advice. And let's just make sure everything's working. Good. All right. The story today is talking about the generations that hold Bitcoin. We're going to look at some numbers, some charts. We're going to talk about insider trading, recession, and some of our favorite criminals, some Dexes, and which Dex has risen to the top lately. A lot of good stuff. So first of all, Fundstrat. These are one of the top analysts that I respect most. They said tourists selling at 30K, just like the chart I showed. Every time it bounces above 30K, it gets sold off. There is considerable portion of the selling pressure has been from top buyers, but this also removes considerable potential selling pressure from the market. So the question is, when will these people be exhausted, or are these just traders? Now, I did talk about this, I think, a few days ago. Every time we spike above 30K, we hit the selling pressure, and that was clear from the SOPR. So we'll see. But fingers crossed, soon the sellers may be exhausted, but I'm not sure. But it might stem back to what they call tourists. Now, the hardcore people that understand, and the penny has dropped for Bitcoin, they are stacking. This is the supply held by retail over the last a month or two. But you can see the big spike at the beginning of May. So despite the downturn, retail investors were actually snapping up the dip, which is impressive. And they know they're going to hold it long term. Now, per the RSI, this is a cool chart from Stock Money Lizards. Never showcased their chart before, but it is a logarithmic regression, comparing that to the long length RSI. Length is 49. I normally use 10, sometimes 14. They used 49. But this is a great tool for bottom finding. Now, if you look at this chart carefully, you'll see the logarithmic regression band going up to the top, but also the green period is times of accumulation of Bitcoin. And also the RSI with 49, long one, corresponds directly to these accumulation periods. So you can see the big green one back in 2015. We had the 2019 accumulation period. We had the very rapid accumulation period during the C19 crisis. And we have one again happening right now. And that can be seen on chain. So again, I know a lot of people are calling for $14,000, $12,000, $20,000 Bitcoin, $22,000. All of it's possible, but I think it's very unlikely when you see the stacking. Now, this was from Ki-Young Ju from Crypto Quant, and he broke out the realized price of groups, cohorts within the Bitcoin world. This is when people actually bought. So you have your first gen, the original OGs who were buying at about $1.30. Back in 2010, 2011, 2012, and so on. Imagine buying Bitcoin for $1. Anyway, that wasn't too long ago. Then you have your second generation. These people have an average Bitcoin price of about $653. There are people that bought in 2014, 2015, 2016. Then you have your third gen, the people that bought in 2017, 2018, 2019, 2020. And it's funny, when you look at the period, let me zoom out for a second. There was a 4-year period where you could have bought at about $8,700, $9,000, but you also had the opportunity to buy at that price in March 2020, only 2 years ago. So it's interesting to see that sometimes it goes up, it goes down, but just getting it at that price. Now, the reason we're showing this chart is the fourth generation people, the people that bought recently, basically since summer 2021. The average price that they have spent on Bitcoin is about $43,582. With Bitcoin hovering just under $30,000, they are $13,000 underwater. But let's zoom in and look at this in a little more detail, because I think it's fascinating, because people need to know the history, because it helps identify where we're going in the future. Now, this is a more detailed breakdown from CryptoQuant I pulled this morning, and I blew up the demographics into different categories. You can see the 10-year plus is actually average price of $1.37. The 7 to 10 year is about $350. 5 to 7 year old, $670. 3 to 5 years is about $6,586. And the last 2 to 3 years, $8,750. And the last 18 months to 2 years, $11,800. But the key is, again, for those people that bought in the last 1 to 3 months, their average cost is $42,000. Those that bought in the last 3 to 6 months, $45,000. Those that bought in the last 6 to 12 months, $48,000. So those of you who did buy out there over half a year ago to a year ago, you have the highest average price, which is starting to think. So sometimes timing is everything. But again, the future is bright. Hold tight. Stack when you can. There's only so much of this to go around. And once it starts really catching on, which is happening very soon, the price will go up. It's just programmed to do so. So let's talk about Dexes for a second. I imagined back in 2021 that 2022 would be the year of the DEX, despite the performance of Uniswap and 1inch and everything else. We'll talk about their charts in a second. But since early May, 1inch has become the leader in the DEX segment, outperforming Uniswap, the largest DeFi project in user numbers, and the tremendous growth in swap volume among Dexes emerging in the segment as the undisputed leader. So you can see blue is 1inch at the very bottom right, and they now have the majority of the DEX volume as of May 22nd. The other pink name is Uniswap up top, which is number 2. SushiSwap is very, very small, and number 3 is just a combination of others. So this is a growing space, but it was impressive to see 1inch grow to the top. Now, in full disclosure, I was asked to analyze 1inch many times last year, and I never did because the tokenomics were really, really bad. This is the IA Crypto Compendium scores. A quick refresher for those who are new to the channel. We've analyzed the top 300 tokens across our metrics that looks at insider distribution, inflation, centralization, regulatory risk, etc., etc. And you can see 1inch had a score of 2.4, which is in the bottom 24th percentile of the top 300 cryptos. Uniswap has a compendium rating of 5, which is not that good, but better than 1inch. But let's check out the price charts and see exactly what this showed up over the last 12 months. You can see that Uniswap is down 82% over the last year, and 1inch is down 84%. So they're both tracking pretty closely. There were times when Uniswap performed a little bit better, but now with that loss of market share, you can expect 1inch maybe to make a comeback. But again, it is quite inflationary as a token, and it has a couple of other things that ding it in comparison to Uniswap. So let's talk about why this came to my mind, and maybe Uniswap has bad publicity. No, it doesn't really. But this came out in an article a few hours ago. And this is Martin Shkreli. He was a guy who jacked up the prices of drugs, people that need diabetes drugs, etc. And he is fresh from a stint in prison for securities fraud. They call him Pharma Bro. But what was interesting, the reason I'm sharing this is not only because we are talking about crime and insider trading and securities fraud, but he was interviewed in a Twitter Spaces session, and he said he was very enthusiastic about DeFi. Of course, he's insider trading. DeFi is kind of fascinating, probably to those criminals. But he did use Uniswap in prison, which I thought was interesting. And he also name-checked Algorand and Solana as being the most promising projects. And he said that he thinks their market caps could exceed that of Ethereum and Bitcoin in the future. So he is dialed in, knows crypto, and it was interesting to see his choices of, again, Algorand and Solana eclipsing Bitcoin and Ethereum in the future. So we're a little bit aligned on some of that, but we'll see. Anyway, let's talk about insider trading in crypto. This is something you all need to be aware of. This is an example. This is from the New York Times, or the Wall Street Journal, I think. Wall Street Journal, sorry, this morning. And the crypto ecosystem is increasingly grappling with the headaches that the world of traditional finance has been tackling for decades. Now, this is just one cryptocurrency called Gnosis, Gnosis. Check it for yourselves. And it was among 46 different cryptos that were purchased by special wallets, accumulated up to a certain time. So you see August 24th last year, the wallet begins buying Gnosis. And then once it gets released or launched, it was listed, I think, on Coinbase. And all of the stuff, once it was released, it was drained and sold and dumped onto the market. So basically, there's no doubt that people know what's going on way ahead of time. You don't want to be on the receiving end of this trade. You wait for something to be listed on Coinbase or whatever. It's kind of like an IPO. The IPO from Coinbase, we knew it was going to tank. It did, hard, way harder than we expected even. But the point is, there are people that have the insider information. They use that and they wait. They accumulate all the tokens really cheap and then dump them on retail once they're listed on Coinbase. Now, Sam Bankman-Fried from FTX did come out and say in an email that his company explicitly bans employees from trading on or sharing information related to token listings and has a policy in place to prevent it. Another reason I like FTX, they don't play with those shenanigans. In fact, I've thought about doing an analysis of all the tokens and relative performance between FTX and Coinbase and Kraken, etc., but never had the time. But it could be an interesting one nonetheless. But let's talk about the S&P 500. We had a wickedly nasty day during the day on Friday, but it did rally into the close. The stock market was awfully close to finishing in a bear market, which means 20% down off its peak in early January 2022. And many investors like to see it get there so Wall Street could put aside and start the work of moving higher. Now, Mike Newton from Fundstrat, again, I talked at the beginning how I respect that firm and they're back again. He thinks the stock market's late day reversal on Friday provides hope that a minor bounce is underway and his medium-term target is 4,100. So that's, again, we're not going to go bombastic till we get a halting in rates, but at the same time, there will be little trading areas that we can take advantage of as we're out there as well. So in addition, let's talk about the recession and the real reason for a recession. Big thank you to Sanjay for sharing this with me this morning. So if you look here, it's obvious why we are in a recession. So Q1 2022, you can see a big red block right there. That is net exports. Basically, imports far exceed exports. One of the reasons the US wants a strong dollar, so they can bring that number down. They can make it cheaper to buy exports. But these are the clear culprits in Q1. Everything else kind of stayed more or less the same, except for investments shrank a lot, which is a big factor. And trade and investment typically are very volatile components, even in the best of times. But during the C-19 situation and supply chain problems, there were a lot of boats stuck offshore. So maybe those boats eventually made it in and were able to dump all of these imports on the market. And that brought the Q1 down into the recession territory. Now, the thing to consider is this transitory, or will this be persistent? Or will the high value dollar reduce this trade deficit as we go forward? Let's look at it another way. This is the trade deficit, up and to the right. U.S. goods, trades deficit, balance of payments is going crazy. So fingers crossed that this will shrink as we go down. A lot of people thinking we might escape a recession, as I discussed yesterday in DCA. But we are definitely in store for stagflation. So inflation will be persistent and economic growth will slow. The question is, will it go negative again for the next quarter? I think yes, but some people are hopeful that it won't. We'll see. Again, expect bumpy times. The next quarter will be rough, but we're going to come out of this and we're going to come out of it fast because it's election year and the Fed are in cahoots with the government. So I remain positive, but again, buckle in for the next 12 weeks. With that, everybody, happy Saturday. Thanks for all being here. And I'll see you all tomorrow, live Q&A, where we answer your top questions from the week. Take care, everybody.